All right, good morning, everybody. Happy Monday. It's January 23rd, 8:40 a.m. my time. My name is Amal. If you are not familiar with our Alpha Trades community, I highly suggest you join the free Discord link below, at least. If not, if you're not familiar with our Advantage membership, which is our paid program membership, you can go to the products page right here. I create videos like this one right here that you'll see on our YouTube page every day, twice a day, sometimes for our members in our Discord channels. All the locked channels that you see right here are made for our paid members. Paid membership starts at $97 per month. If you want to go 3 months or 6 months or 1 year, you have other options too. But we actually have released a lifetime package for $22.50. $22.50 gets you lifetime access forever for our Discord. So anything I post from today onward for however long I stay with this community, you have access to it forever. And trust me, I've been doing this already for 4.5 years. I plan on being here for a long time. So if you want to take advantage of this $22.50 lifetime package, it would be a fantastic opportunity for you to come join our community. Okay. In the community, I post analysis for BTC with things that I see in the market, whether it's things happening regarding the price action, news that's hitting, how that's going to impact the other altcoin markets, other opportunities that we see lining up. And then we also have altcoin analysis here, where I talk about different projects, different things that I'm seeing. We were talking about Injective today, Aptos, Rose the other day, the Joe token. We talked about pullback opportunities for our members at specific levels to look out for, token unlocks. I mean, really just all kinds of interesting stuff. And then, of course, within that, I also have things that I post where I'm taking a trade. It's not meant for copy trading. It's not meant for financial advice, but it's to show you that, here are positions that I'm taking today, right? Here's what I'm entering, at what price, at what size. And I post that here in the altcoin spot or levered channel. We also have a farming, staking, and lending channel where we talk about, where is the hottest yield, sitting, which ecosystem, where is it at, what DeFi protocol. Same thing over here. We talk about Bitcoin, leverage short or leverage long opportunities. And then, of course, we have a chat, which is, of course, like filled with people and conversations, and you can talk about, whatever you want to talk about regarding crypto, or ask questions, whatever you want to ask about. Altcoin chat, same thing, but regarding altcoins, we discuss price action, different opportunities, fundamental analysis, all kinds of cool stuff in here. And of course, we have a whole NFT section, which we also spend a lot of time in. Point is, we have a lot going for us in terms of our membership. You can join just for 1 month, which is $97 per month, or you can commit lifetime, in the current bear or bull market, whatever you want to call it, and stick with us till the next bull market, right? There will be a bull market at some point. If you don't want to grind it out and you don't want to keep paying month by month, and you just want to commit because that crypto has a future and that there will be a bull market someday, commit with us, come spend time with us. You'll see that, one thing people will say is, I consistently post a lot of updates, a lot of analysis. I will answer questions whenever you have them, whatever questions you have. If I don't know the answer, I'll go hunting for the answer for you. Okay. So let's start off with the analysis, right? So let's just say, over the last few months, you were living under a rock and you didn't really know exactly what's going on in crypto. And you're thinking like, okay, well, now does it look like the time to get in? What do I do in this situation? What's going on with the world? What's going on with crypto? I think for the most part, right, we know what happened in March 2020, which was the COVID crash. That led to unlimited money printing, which led to a massive boom in assets, especially crypto assets. Also very true for the US equity markets, right? This was the COVID crash right here. in US equity markets, and that took off, okay? And that caused a boom in pretty much, all stocks, right? You can see Tesla went from down here around $23 all the way to 400. You can look at stocks that had just debuted, like Palantir. Palantir had debuted, I think somewhere around October 2020, it rocketed up. Again, this was all because of the massive money printing we had that was started, right around the COVID crash, right? So that took the markets up. Point is that, Palantir, Carvana, any of these stocks you look at, they had huge booms and then busts. So where did the bust come from? Well, the bust came from when the Fed basically decided that, hey, we need to stop this money printer because we're seeing a lot of effects in the inflation data. Inflation around the world had gone up, especially here in the United States, because in the US, we basically printed, way too much money. And that led to assets beginning their, almost 1 year or over 1 year decline, starting from November 2021 in BTC. And in other altcoins, you can see right here, even Atom or Ethereum, they all literally topped almost around the same time, right? Matic topped right there, January 2022. Solana pretty much topped, right there around November 2021, right? All in all, November, December 2021 or January 2022, that's where everything pretty much topped. And we start to head down pretty much the entirety of last year. And finally, we started to catch a bounce because the markets had been so darn oversold for so long, right? From here down, you can kind of see, things like Solana were down 96, 97%. Ethereum was down, I think, like 70%, I want to say, or 80%, 81%. BTC, I think, was down probably 75% or so, right? 78%, as you can see. Okay, so the point is that markets got beat up. They got hammered because the Fed decided to hike rates, which basically means, making money more expensive, right? So I have this little thing that I created right here. So, if this is the Fed right here, right? And these are your asset markets, okay? When the Fed has 0% interest rate policy, right? With, let's just say, I don't know, 1 trillion amount of dollars that they want to keep as a money supply, okay? When they had upped this because of the COVID crash to almost to the tune of, like multiples above what the norm is. So let's just say they injected, I don't know, $10 trillion. Well, this is crypto in here. This is equities in here. This is real estate in here. And then all kinds of, gambling and speculative vehicles that people wanted to invest this money because they just handed this money to corporations, to people. This money got put into this market and all these assets started to blow up. They took off in the most massive way, right? Crypto itself went up like, I think 5x or 10x in market cap. Some assets, like Carvana went from 24 bucks to almost, $350 or so, right? So that's over a 10x. And these were all garbage assets to begin with, right? They were getting pumped up because interest rates were low, right? And by the way, this was still 0%, okay? Interest rates were low, and then the Fed was pumping a lot of money. And then what happened? And this is all, pre-2022, okay? That's all pre-2022. And then what happened? Okay, then the Fed said, hey, wait a second, guys, we're causing inflation because too many people have too much money. Money is going into all these speculative vehicles, and we're basically creating a gambler's paradise, right? So around, like I said, right, November, December 2022, the Fed decided to start hiking interest rates, and that's where, like I said, you start to see a top form in many assets. Some assets like Carvana had already begun their top, months before, because the market kind of knows like, hey, wait a second, Carvana or some of these assets, they're just not sustainable in an environment when the Fed says, hey, we're going to hike interest rates to 3%, and we're going to take that $10 million that we gave you, right, injected into the market, we're going to start clawing that back. Remember, that was in crypto, that was in real estate, right? That was in equities, okay? Equities and you know, other gambling assets, right? So the Fed said, hey, we want, you know, that money back. Basically, the way they start doing that is something called quantitative tightening, which in basically is a way of pulling money out of the system. And then they also started hiking interest rates from 0% to 3%. Technically, Fed funds rates right now, I think, like are somewhere between 4 to 5%, with the optionality for the Fed to go even higher. So what happens when these markets start to realize, holy shit, money's not cheap. You can't just invest, you know, money in random stuff. Well, that money starts to come out in a very, very brutal way. And these assets start to go down in value very, very fast. So that leads us to where we are now, which is we've had a pretty tremendous blow up in the market. The Fed has hiked interest rates, right? So here's Fed interest rates historically, okay? So let's look at sort of how the interest rates have been for the last, you know, several years, right? So as of like a few days back, it was 4.33%. Guess what? You know, in 2020, it was pretty damn close to zero, as you can see right there. Look at this spike in interest rates. What the spike tells us is, like I said, money got expensive. The quantitative tightening happened, and the Fed is basically saying, wait a second, we got way too much money out there, you know, sloshing around. We need to pull that money back. And that has negatively impacted equity assets, right? We could see even the S&P 500 was down almost 20% a couple of months back. Crypto was down 85%. But now the Fed has stated, you know, hey, we may pause the interest rate hikes for a little bit, but doesn't mean that they're going to reverse them, meaning they're not going to go from 4 to 5% down to 3 or down to 2. They're just saying, hey, we may not hike as much anymore like we did last year, because they basically went from 0 to 3, 3 to 4 to 5. That's a very, very aggressive hiking cycle, okay? So now what we have is a potential pause around 4.5 to 5%, which is coming up in February. And asset markets are seeing that as a positive because they're like, hey, wait a second. I think the markets have priced in a lot of negativity, and the asset markets, and again, this is people's belief, they believe the asset markets are going to, you know, start going up from here, right? Because they believe asset markets have priced in a lot of rate hikes, a lot of quantitative tightening, and a lot of like economic pain. Well, okay, but now the question is, well, does that mean like this is just the range and, you know, we are going to traverse in this range until assets themselves figure it out? Maybe the economy goes into a recession and we still stay range bound. Is that the case? Or have we bottomed here? And is BTC going to head back towards 35K, 40K, 70K and beyond in 2023? My fundamental thesis is that the market is still in a very, very uncertain, very peculiar area that you want to be extremely cautious with. You do not want to start gambling and calling bottoms. This is something that I talked about right here in my Twitter thread, right? You do not want to start calling bottoms when the Fed has not even stated that it's going to pivot, you know, away from that 4 to 5% interest rate, a Fed funds rate, into lower interest rates, right? All they're saying is we're just going to pause. And that pause has gotten people excited into thinking we've bottomed and we're going to start heading up. I don't think that's the case. I do think that the market was extremely oversold and it's definitely due for a relief rally, right? Remember, the pace at which the market exploded did not match the amount of innovation that went into crypto. Okay, that's the cold hard truth. Okay, so the point is that as that money is coming out, like I showed you earlier, this can beat up assets and keep assets suppressed either in a range, or we could start another downtrend in the next few months and head down lower in BTC or in, you know, total market cap, right? We can head down in total market cap too. We open up a new chart here, right? let me do something here. Here is the total market cap of crypto, okay? This is where we began that massive Fed, QE liquidity cycle. We went up basically from down at the lows around $100 billion for the entire crypto market, and we went up to almost $3 trillion, right? That's a 30x in the entire crypto market cap. Most of that was BTC, right? But some altcoins went up 50x, 100x, 1000x, right? Because they had already very small market caps. Now what do we do? Well, I still believe that we may be on a pretty aggressive downtrend that you want to respect. You do not want to think that from here, we're just going to break on up because, oh, well, it's already been a brutal bear market and, we don't think we're going to go lower. Yeah, you probably could. You could probably go lower for another year, okay? That's how brutal bear markets can be. If you start mapping out, say a trend line, even just on total market cap, yeah, you could press up a little bit more towards like 1.1, 1.2 trillion up here, and then keep breaking down for the second half of 2023, right? For the second half of this year. And that's something that we want to be careful about. But guess what? We're only in the first half of 2023. And for now, we should enjoy the reprieve that we're seeing in the asset markets. So I'm not here to be a Debbie Downer and just call this a bear market rally and keep shorting it. No, I don't believe that at all, because that's the easiest way to get blown up in crypto anyway. What I'm here to tell you is take advantage of the opportunities, but do not forget to take advantage of taking that profit out and actually using it for your own good. Right? Don't ever forget that, because that is the fundamental thing that escapes and eludes people. Okay. So what we need to do is recognize what opportunities are out there. Well, again, if you have not signed up, you can sign up for the Advantage membership subscription. Go to thealphatrades.com, go to the products page, and you can sign up right here. Some things that we've pointed out, for example, what are the weekly level retests that Ethereum can come back to and still stay bullish? Well, Ethereum can give you a retest at this yellow level around $1,400 approximately. And from here, it could go all the way up to $1,950, close to $2,000, let's just say, right? So if you get a retest at this level, from here to about $2,000, that's about a 40% move. That's pretty damn solid. If you want to start buying now, well, guess what? You've already come into pretty key, resistance levels, right? This is a pretty strong resistance level that Ethereum is going to have a tough time going through, in my opinion. Okay, so be careful with that. Be careful of all the chop that you may experience in this area, where it's chop, chop, chop like this, before it gives you a pullback like that, and then it ultimately maybe goes up, I don't know, in the next few weeks, because you've already had a substantial move for Ethereum since the new year, right? So basically in 23 days, Ethereum has gone up already 40%. So when something goes up 40% like that, yeah, you're definitely going to get a pretty sharp pullback in assets. That's not only Ethereum, but that's talking about BTC, which looks like it's beginning its mini sell-off right now. That relates to other assets I'm watching too. For example, I'm watching Solana, right? I think Solana on a weekly basis could come back to $18 or so. Matic can easily come back towards like maybe 85, 90. We have something like AVAX. AVAX right there could come back all the way to about $14 or $15. And then there's random assets that I'm watching, things like Fetch. Okay. Fetch, I think we were trading Fetch from about 18 cents. We got out somewhere around 23, 24. I even, let members know like 30 cents is a target. I didn't stay along for the ride, but the point is I let my members know, right? We took some really, really great trades in our membership program. I closed out DOT at a loss, but before that, guess what? I had a Fetch trade, which we closed out at about 30% profit. Before that, we had a AVAX trade, which we closed out at 1 or 2% profit. And before that, we had a Solana trade that we had gotten into around $8.50 approximately. We literally sniped the bottom. And we closed out that move with a 50% gain, right? So we're not afraid to talk about our losers, such as this Polkadot losing trade that I had, which is at 8.5%. But guess what? We also had big movers, like I just showed you with that fetch position, securing a 22% profit and then a 30% profit, right? And then before that, like I said, we had an AVAX profitable position. We had a Solana profitable position. And the point is that I got into Solana at 850. I got out at $13, right? I think I took another scalp trade in Sol, maybe like a couple of percentage points, but I didn't catch the entire move, right? I didn't catch the move all the way from $8 to 24, which is where we are. But that's not the point in these markets, right? Like the point is, how can you secure your profit without having to take too much risk, without having to FOMO and hold on forever, without knowing and recognizing where should you take profit, right? So that is ultimately, our motto in an Alpha Trades community, which is that be able to recognize that, when the market conditions are a little bit uncertain, okay, which I believe they are right now, your job is to just secure profit. Your job is to not see, oh, have I sniped the bottom? Did I catch Solana at $8? And am I going to be able to sell it at 250? No, you're in a pretty severe downtrend, especially with the macroeconomic factors that I told you about. Your job is to secure profit. Your job is to, keep your money safe, right? Keep your capital safe. Keep your risk very, very low. Because now is not the time to start putting on massive risk positions to put your capital at risk. Now is the time to start, being able to recognize range trading opportunities, opportunities to take profit, opportunities to catch momentum trends. That's it. So that's number one, right? Which is recognizing how to manage your risk. And then, of course, like I said, which assets to be paying attention to. Then there's the story of, well, what else is going on in crypto? Well, NFTs have become a huge thing, right? We've often talked about the Solana ecosystem being very hot for NFTs. You guys know one of my favorite communities is the DGods community for NFTs. DGods created Utes. They have their own DGods NFT. I think they've moved to Ethereum and Polygon for their Utes NFT collection. But the point is that these are amazing collections that you want to follow. I don't really follow that many collections all that much, but here in the NFT analysis and gaming area, the other day I was talking about, hey, we should be paying attention to Polkadot NFTs, right? Here's also some data on what's happening with the NFT perps, or what exactly is happening with how many people are actually utilizing NFTs as their first entry to crypto, right? Things like that. So the point is that there's a massive section in a population that's heading into the NFT areas and not much really caring about BTC. Okay, they don't care about BTC or trading altcoins. They just care about trading JPEGs or trading NFTs. And that's fine. That's a whole, different business. So that is something that you can start doing research on right here on CoinGecko. Aside from that, then there's ecosystems, right? One of the hotter moving ecosystems right now is Arbitrum. We've talked about Arbitrum again, in our community. Some things that you want to be paying attention to in Arbitrum in terms of assets are things like, I mentioned Umami before. I mentioned Math before. There's Tracer DAO, which I've mentioned before. There's all kinds of research that you could start doing and experimenting within Arbitrum ecosystem. Okay, so there's things like that. Then there's other things that you could start doing. For example, if you go into the altcoin analysis area, right, you can start looking at newer ecosystems. Okay, Aptos is one. Aptos is not really a fully launched ecosystem, but guess what? It's taking off a ridiculous amount in price, right? So that means that they're trying to get people excited and pumped up about getting into the ecosystem. Is it going to work? I don't know. But your job is to just do research and experiment, see what works, see what doesn't, and just try out different products. That's the great thing about crypto is to be able to invest in something, you get to try it out first, right? It's like buying a Tesla, okay? Imagine if someone told you, hey, before you buy a Tesla, you can experience the Tesla as much as you want. Before investing in Tesla stock, you can experiment as much as you want. Well, that's not really the case for most companies, is it? Right? You don't really get to do that for free. You get to do that in crypto basically for free. You get to see at either free or a very, very cheap cost. So I would highly encourage you to check out Aptos. I would highly encourage you also to check out Injective. I talked about Injective yesterday with the Advantage members. There's some interesting stuff happening in Injective. I see tweets here and there. I see the Injective community, posting and talking a lot about Astroport, which is sort of their DeFi, new bridging style protocol that's coming out, which has also moved to Injective. Injective itself is actually built on the Cosmos ecosystem, which is great because Cosmos has this IBC, which is inter-blockchain, communication. That means Injective can actually talk to pretty much, most of the other assets and products on the Cosmos ecosystem. So all this stuff is great, for when you're trying to test out a new ecosystem. And so the point is, this is where you get to start experimenting in Injective, in Aptos, in Arbitrum ecosystem, right? And again, I don't have a position in any of this, okay? I'm not telling you to buy what I've already bought or anything like that. I myself am actually doing the experimentation on my own. When I take trades, right, I post them for my members right here. I post them, the high-risk scalp trades right here. We had a high-risk scalp trade a couple of days back where I was kind of thinking like, okay, well, I wanted to take on a long position around 21,300, but it was so late in Friday afternoon. So I was like, I don't really feel like heading into the weekend with the position. So I felt uncomfortable taking it. Well, guess what, right? After I literally took the position right here, the market took off, so that was a huge mistake, right? But guess what? It perfectly lines up with my methodology, which is if I don't feel comfortable heading into the weekend with trades, then I just don't do it, right? And even though it took off like this, it doesn't matter. I missed the trade. It is what it is. I can't do anything about it. And that's the kind of like mentality and logic you want to take, because people will get you excited at all the wrong times about, oh, well, this is the best time to get into the market. You have to buy this, you have to buy that. And they don't really care about, exactly what your risk tolerance is. Okay. So anyway, I just wanted to let y'all know that's exactly what we're doing right now in terms of, looking at the markets, what ecosystems we're paying attention to, all that jazz. All right. Thank you, everybody. That's pretty much it. Good luck. I hope you guys join our Advantage community. Till then, take care. Cheers.